Dolphins. You are with Ashraf Patel and the crew, and our flight destination for today is the debtors reconciliation statement. All right, what do we know? We've dealt with the bank reconciliation statement. We've dealt with the creditors reconciliation statements. Remember, both of them, internal and external. And today's flight, as I said earlier on, is taking us to our destination, namely the debtors reconciliation statement. Okay, so therefore, have you thought about this? Number one, what is the relationship between the general ledger and the debtors ledger? This once again brings us to the principle of the triple entry principle. Allow me to explain. When you record a transaction with a debtor or a creditor, but today's focus obviously is the debtor, you will record the double entry in the general ledger. Okay? For example, bought goods on credit. Sorry, we're dealing with debtors. So, sold goods on credit to our debtors, right? Credit sales. Debit your debtors control account because it's an asset increasing in value, and a credit to sales because it's an income account increasing the equity, therefore credited. We're not talking about the second part of the transaction, obviously, the cost of sales and the trading stock. Our emphasis is on the debtors control entry. At the same time, you will also have to record a single entry in the debtors ledger in the account of the debtor who bought the goods on credit from us. Okay, so this means therefore that when you are dealing with a debtor or a creditor, you will always apply the triple entry principle, right? What are we reconciling? We are reconciling the debtor's control account as it appears in our general ledger with the debtor's list, which is an extract of our debtor's ledger. Keep that in mind. Keep that as your main focus. Debtor's control account, where in the general ledger, and your debtor's list, which is an extract from your debtor's ledger. So you have individual debtors in your debtor's ledger. Why do you need to do a debtor's reconciliation? Obviously, the debtor's control account has to agree with the total of my debtors as they appear in the debtor's ledger. There could be errors, there could be omissions, there could be fraud, and therefore, as part of internal control, we draw up a debtor's reconciliation statement where we reconcile the debtor's control account in the general ledger, which is a summary of my debtor's ledger where the individual debtors appear. Okay, so what are the key words? What are we expected to remember? One, the debtor's control reflects the total amount owed by all the individual debtors. Your debtor's control account doesn't reflect individual debtors. It shows you a summary, the total amount. Okay? Here's an example. So at the beginning of the month, if you look at your debtor's control account, you find there's a balance of 52,600 at the beginning of the month. Clear? Then obviously, you're going to enter into transactions with your debtors during the month, depending on one, sale of credit sales of merchandise. We sold goods. Now watch this here. A total of 121,600. Does this figure tell you who you actually sold goods to on credit? And the answer is an emphatic no. Why? Because this is the total credit sales. And therefore, like we alluded to earlier on, this is reflected in the debtors control account in my general ledger, right? There was an RD check of 4,500. Once again, do you know who the RD check was from? No, that's the total posted from my cash payments journal, right? Petty cash, we paid out of petty cash on behalf of debtors. So once again, what are we doing here? We're showing you the transactions in your debtors control account, right? Which you will then realize does not give you any information on specific debtors. Rather, it is a summary of the transactions that were entered into between us and our debtors. Here's your bank and discount allowed, payments that were made to us from our debtors, that was allowances that were granted, and clearly you can see the balance on your debtors control account at the end of the month amounts to 87,500. Right. Now, look at this here. What's your debtors list? Your debtors list is a list of people that owe money to the business. Now, where does this debtors list come from? Obviously, your debtors list comes from your debtors ledger, right? And in your debtors ledger, you have individual debtors. Here we go. Clearly you can see you have debtor A Ash, B Brown, C Sele, D Dube, and E Exteen. Those are your individual debtors. And if you total them, the total of your debtors list amounts to 87,500. And if you compare that to your debtors control account, watch, 87,500, meaning that your control account is in agreement with your debtors list. And clearly you can now see that debtors control, summary of my debtors, debtors list, individual transactions as they affect our debtors. General ledger, double entry principle applies, single entry in my subsidiary ledger, giving me what we call the triple entry principle. Double entry in your general ledger and a single entry in the individual accounts of your debtors. Okay, let's move on here and let's look at the flow chart. What do we have? Firstly, you have your documents given to your debtors. That means invoices, debit notes, credit notes, all the transactions that you enter into with your debtors. What happens to them? They are recorded into your correct journal. Meaning, enter into your debtors journal, enter into your debtors allowances journal, enter into your cash receipts journal, debtors journal to record the credit sales, debtors allowances journal to record any allowances given to our debtors, cash receipts journal, monies received from our debtors, cash payments journal, any RD checks or RD amounts that appeared from my cash payments journal. Just on that, remember, with current legislation, you're going to have checks no longer being used in the economy, so obviously that would impact on the accounting curriculum, right? And then obviously your general journal to record any entries that do not fit into any of the other journals, which will record entries for our debtors, for example, charging interest on their overdue accounts, bad debts, etc. So once you've entered into the correct journal, you post totals to the debtors control account. This is what we refer to as our general ledger, subjected to the double entry principle. Clear? Right, okay. Now you take your debtors control account And obviously you balance it like I showed you. Let me just show you what we're referring to here. When you balance your debtors control account, you end up with a balance of 87,500. Okay? Now, let's go back here. Coming to my individual debtors, what do I do here? Here you can see from the journal, you also post to your individual amounts, to your individual ledger accounts. Remember, this is one account recording all the transactions regarding our debtors. But in my debtors ledger, remember, this is your debtors ledger that you are dealing with here. You're posting individual amounts. You're not posting totals. You're posting individual amounts to where? To individual ledger accounts. So sold goods to A. Ash, B. Brown, E. Exteen, etc. Individual ledger accounts. Then, where is that done? That is done in my debtors ledger here. So I'm posting to my debtors ledger. And in this way, you can clearly see that the double entry takes place in my general ledger, right, into my control account, and the single entry in my debtors ledger to the individual accounts of each debtor. And then what do? I then, from my debtors ledger, I extract a debtors list. Okay? And once I extract the debtors list, what do I know? I know that these two should be equal. What's that? Your debtors control account with your debtors list. Okay. So now, if we're saying, what have we said so far? To summarize it, we say that the balance of your debtors control must be equal to the list of your debtors, or the debtors list that you extract from your debtors ledger. So the control account must agree. What are the internal control procedures that we need to have in place with regards to our debtors? Number one, check creditworthiness of the debtors. What do we want them to do? Provide information. Who have they bought on credit before? Do they have a record of a credit history, right? Transactions that they've entered into credit with other suppliers. In that way, we check the creditworthiness. We also check for the, why are we doing this? The reason we are doing this is to limit bad debts by doing proper investigation. In other words, you don't just nilly-willy sell to anybody on credit. No, they must provide you with individual information, pay slips. Sometimes they ask for bank statements, physical addresses, to check whether they are FICA compliant. There's a host of background questions that need to be asked before we can approve of a debtor to be buying goods from us on credit. Because remember, the onus is on the business to ensure that they do these checks, because we don't want to have a case where we're selling goods to our debtors on credit and they are unable to settle their accounts. Each debtor must have an individual account. In other words, each debtor's account will be separate. Where is that kept? In the debtor's ledger, right? And also, we must have complete and accurate records for each debtor. In other words, each debtor, whatever information we have, or any documentation that takes place, like we showed you in the previous slide, will also be recorded in their personal accounts in the debtor's ledger. Okay. What do we have to do in order to inform or keep our debtors updated? We must ensure that we send regular statements or SMSs or emails or WhatsApp messages. In this way, a debtor is informed as to the amounts that are outstanding. Also, make sure that we give discounts for prompt payments, right? It's sometimes referred to the carrot and the stick method. The carrot method means you provide an incentive to your debtors that if they settle their accounts timeously, they will be entitled to a discount, right? And obviously, if that doesn't work, then we have to resort to the stick method, and we don't physically beat up our debtors, but what do? We actually charge interest on overdue accounts. In this way here, you can clearly see that you're keeping your debtors updated. You're informing them. For prompt settlement, you're getting a discount. If you do not settle your accounts on time, you will be charged interest on your overdue accounts. If all of that fails, then you have what is called a handover to lawyers. What does this mean? It means that you then hand over your debtor to a lawyer, and then legal steps are then followed to try and recoup the debt from our debtors. Okay, so what have we done? We've shown you the debtors control account, we've shown you the debtors list, we've shown you how the two must always be in agreement. We now, in our next segment, we're going to go into an actual debtors reconciliation. So you want to know more? Stay with Ashraf and the crew, and we'll see you just now. Welcome back, accounting boffins. Yes, we're on the flight, remember, and the flight destination is the debtors reconciliation statement. Remember we said a debtors reconciliation, we are reconciling the debtors control account with our debtors list. Okay, let's carry on. We are given information here, information from the records of Pearl Traders for November 2020, right? And we are told that there are some errors and omissions that were noted, and we have to look at that information in order to do the necessary reconciliation. Right, let's look at the first one. It says here, calculate the correct debtors control balance on the 30th of November 2020. We have to show figures and indicate whether there's a plus, a minus, or no change at each adjustment. At each of these errors and omissions, we have to do and indicate a plus or minus or no change. Right, so we clearly know what is expected of us. What are we told? We are told that on the 30th of November, the total of your debtors control account was 25,700, right? Your debtors list, if you look at it, there's a debit of 32,700 and a credit of 1,900, right? So obviously you can see that the two are not in agreement, right? And as a result of them not being in agreement, we now have to draw up or make the necessary changes in order to reconcile what? My debtors control account with my debtors list. All right, okay, here we go. Number one, you are told that the debtors journal was undercast by 2,700. Now the method we're going to use for this question is we're first going to update the control account, and then we're going to update the list, right? So let's start off with this one here, where we are told that the debtors journal was undercast by 2,700. The first question that you ask yourself is, where is the error? Is the error in my control account or is the error in my list? Clearly you can see here the error is in your control account. Why? The total, that means the individual amounts were correct, but the total of the debtors journal was undercast. It was less by how much? 2,700. Let's go and correct it. So we go to the control account. That's where we're going to fix it. What are we going to do? That was the starting balance, and because it was undercast, we're going to add to it an amount of 2,700. Clear? Right. Now the question arises, does this impact on my list? Not at all. It only affects my control account and therefore it is only corrected in the debtors control account. Okay, next one. Interest of 350 Rand must be charged on the overdue account of S. Miller. Right. Now, if we are charging the debtor interest on the overdue account, obviously you are debiting debtors control and crediting interest income, and also because it's a debtor involved, remember that's your general ledger entry, you also make a single entry in the account of S. Miller. But like I alluded to earlier on, for the first part of this lesson here, we're only concentrating on the control account. Therefore, if you look at your entry, it says here, charged interest to S. Miller, how much? 350. But keep this in mind, that it also affects the individual account of Miller, which we will be doing just now. For now, we're only correcting the control account. We're going to do the list just now. Right, so obviously this one impacted on both control account as well as the list. But for our purposes now, we're only doing the corrections to the control account. Therefore, by debiting the control account, you are increasing it plus the 350, the interest charged to Miller. Okay, next one. An amount of 3,100 received from L. Nkosi was incorrectly recorded as 1,300 in the cash receipts journal. Okay, we received an amount of how much? 3,100, correct amount. What did we record it as? We recorded it as 1,300, where in the CRJ, and posted as such to the general ledger and the debtors ledger. And this is the part that you need to understand. It was recorded incorrectly in my journal, therefore was posted incorrectly to my general ledger as well as my debtors ledger. Let us first do the correction in the general ledger. Obviously, the difference between 3,100, let's do that, 3,100 minus the 1,300, give me a figure of 1,800. Therefore, if we look at my correction, there we go. Because the payment, it was a payment that we had received, we only subtracted 1,300. We were supposed to subtract 3,100. The difference here is the 1,800, and now we say L. Nkosi payment incorrectly recorded. Remember, the error was perpetuated in two places because the journal was incorrect. It was posted to both the general ledger, meaning the debtors control account, as well as the debtors list. But like I said, for now, our emphasis is only on the control account. We're going to come back to the debtors list just now. Okay, so there we go. L. Nkosi, payment incorrectly recorded. How much must we now record? The 1,800, which is the difference between the 3,100 and the 1,300. So the correct amount that was received was 3,100, but we recorded it as 1,300. Clear? Great stuff. Trading stock returned by Sandleni was posted to the wrong side of his debtors ledger account, 1,200. Read the transactions. Remember what we said. Very important. Let's remind you. RTFQ. Read the full question. Understand what you are doing. Right, it says here, trading stock returned by Sandleni. That means a debtor returned goods to us. Was posted to the wrong side of his account, where in the debtor's ledger, meaning your control account is correct. In other words, this return by Sandleni has no effect, there's no change on my control account. Why? Because it's entered in my debtors allowances journal correctly, posted correctly to my general ledger, but incorrect in the debtors ledger. Watch, very important. Incorrect in the debtors ledger, meaning general ledger 100% correct, but the error is in my debtors ledger, and this is where I need to correct it. So how does it impact on my control account? There's no change in my control account because the amount is absolutely correct, posted correctly to the general ledger, where the debtors control account was absolutely correct. No problem with my control account. No entry was made for a credit sales invoice issued to M. Veldhagen for 1,500. In other words, this transaction was omitted completely. Read, no entry was made for what? For a credit sales invoice. That means the invoice was not recorded at all. So it does not feature in my debtors journal at all. In other words, by omitting a transaction completely, like this one here, would my control account and list agree? And the answer is yes. Why? Because you've left out the transaction in both places. It's not featuring in the control account, and neither is it featuring in the individual account of the debtor as well. You've left it out completely, and therefore they will be in agreement. Obviously, we're talking about this transaction specifically. So therefore, you can see it needs to be corrected in both places. But let's do the control account first. Here we go. Here's my balance before errors and omissions, 25,700. I now say M. Veldhagen, no entry for the credit sales, add the amount of 1,500 to my control account. Why? Because obviously this transaction was omitted completely. The double entry would be debit debtors control, credit sales. By debiting your debtors control, it's an asset account, you're increasing it in value, therefore debited, there's your debit increase of 1,500. Okay. We now go on to the next part, and now we look at the corrections in terms of all the corrections that we have done with regards to the control account. Right. We started off with the balance before errors and omissions was 25,700, right? Okay, guys, remember, then there was the debtors journal that was undercast, if you recall the transaction. So what I'm doing now is I'm showing you the comprehensive debtors control account, okay? Once again, let's go through this one here. The debtors journal was undercast by 2,700, double entry, debit debtors control, credit my sales account. Therefore, a debit in debtors control means that you're going to add plus 2,700 to your debtors control amount. Okay, now remember what we're doing now is a recap of all those individual ones that we showed you separately. Right, then there was interest that was charged to S. Miller, and the double entry once again, debit debtors control, credit interest income, and also, remember we said, we're not looking at the debtors ledger at this stage, we're only looking at the effect on the control account. Okay, so there we go, debit debtors control plus 350. Okay, then there was an incorrect payment, remember the 3,100 and the 1,300 from my cash receipts journal, which was recorded incorrectly, and the difference was the 1,800 El Nkosi payment incorrectly recorded, and then we brought in that payment, and there the entry obviously would be a debit to bank and a credit to my debtors control. So whenever you are crediting your debtors control, you in fact decreasing it. Why? Asset decreasing in value. Okay, keep in mind that some of these errors and omissions are also going to impact on the individual entries in my debtors ledger. But like I said, we're going to come to that in the next segment. For now, our concentration is only on the control account. Okay, then there was an entry where we had trading stock that was returned and was incorrectly posted. Remember what we said? The error was only made with regards to the entry in the debtors ledger. In other words, my control account was perfectly in order, and therefore this particular transaction had no change or no impact on my debtors control account because it was correctly posted to my control account. The error was incorrectly or the error was incorrect in my debtors ledger, meaning the error was in the debtors ledger and not in the control account. And then finally, there was a transaction for Veldhagen where the entry was left out completely. And here again, I made you aware of the fact that if a transaction is left out in its entirety, the control account and the list will agree, right? Therefore, it needs to be corrected in both places, meaning the control account as well as the list. Therefore, with regards to the control account, my entry is a debit to debtors control, a credit to sales, and therefore, we now take all these transactions here, and what do we have? The correct control account balance is 28,450. Okay guys, that's the control account done and dusted. Now you want to see what does the list look like. In order to do that, you need to stay with us. We'll see you just now. Welcome back, accounting boffins. Remember, our destination is the debtors reconciliation statement. What are we reconciling? We are reconciling the debtors control account as it appears in my debtors ledger with my debtors list as it is extracted from my debtors ledger. Right, we're in flight, we're getting close to our destination. We've already completed the debtors control account with all the errors and omissions. We're now looking at the debtors list. Here goes. We're saying update the debtors list on the 30th of November after making the required adjustments. Okay, first one. There's my debtors list, right? You've seen it before. The debtors control account has been adjusted already. Remember, we've done that. We've completed that. That process is done. We're now at the point where we're working with the debtors list. And we're taking each of those adjustments in terms of errors or omissions, and we're seeing what impact, how is it going to affect my debtors list. Okay, here goes. First one. Interest of 350 Rand must be charged on the overdue account of S. Miller. All right. Okay. Let's go into our information. We're given information. Remember we said S. Miller had a balance of 11,100. Let me just show you where we're getting it from so you know. There's 11,100. So therefore, here we go. There's 11,100 given information. So very important, a very important point here is when you start your reconciliation of your debtors list, open the bracket and start with the information that you already have, okay? Because you're showing your calculations. And it is imperative that you show your calculations because obviously part marks are awarded to these calculations. Right, you're charging interest of 350 Rand on the account of S. Miller. Clearly, S. Miller plus the 350, which is the interest that we charge, add the two together, will now give you the final balance of 11,450. Remember, this one here also impacted on my control account, but we've done that part of it, so now we're doing the list part of my errors. Just to take you back, you remember the one that said that your journal was undercast? Why is that one not impacting on my debtors list? Because the list was absolutely in order. There's nothing wrong with the list. The error was only made in the control account, and therefore that is where it was corrected. Okay, next one. The amount of 3,100 received from El Nkosi was incorrectly recorded as 1,300 in the cash receipts journal and posted as such to the general ledger as well as the debtors ledger here. So the debtors ledger is the one we're busy with now. We've corrected the general ledger. If you recall the previous segment of our lesson, we corrected the control account. We are busy with a list. So here we go. We go to Nkosi's account. Firstly, get the outstanding balance of 5,700, which is given to you, minus the 1,800. Because remember, the payment that we received was 3,100. We only recorded 1,300. We did not record the correct amount. In both the control and the list, fixed up the control, now we're fixing up the list. What is the difference? 3,100 minus the 1,300, the difference was 1,800. There's my 1,800, a minus 5,700 minus 1,800 will give me my final balance of 3,900. Okay? So once again, show your calculations. 5,700, you can clearly see, comes from the original list that you have there. There's it, Nkosi, with a debit of 5,700. Okay, so that is Nkosi's story. What's the story? 5,700 minus the 1,800 to give me my final balance of 3,900. In this way, we are now updating the list with the errors and omissions. Okay, next one. Trading stock returned by B. Sandleni was posted to the wrong side of his debtors ledger account, 1,200. Just to take you back, remember, we asked the question, did that error impact on my control account? And the answer was no, because the control account was correct. The error was made by us posting to the wrong side of his debtors ledger account, amount of 1,200. Okay, here we go. Sandleni, first, let's get the opening balance from the given information. Here we go. Sandleni has an opening balance, a debit balance of 15,900. Therefore, we start off with the 15,900 as my opening balance. Now, Sandleni had returned goods to us. In other words, his account had to be reduced by how much? By 1,200. But because the amount was incorrectly posted to the wrong side of the account, once again, a reminder that the moment you post to the incorrect side of the account, remember what we said? Should ring a bell, double the amount. What I've done here is I've shown it to you as two separate amounts so that you are aware of what is happening. Number one, by us subtracting the 1,200, right? All that we are doing is we're cancelling the initial mistake, right? So by reducing the amount by 1,200, you basically taking out the 1,200 that you had put there incorrectly. And that's the important part. The original error was on the wrong side. That means you increased his account by 1,200. By now reducing it by 1,200, you're merely cancelling out that error. And therefore, it becomes necessary now to do the transaction for the actual return of the goods. And what was that transaction? You got to reduce his account by the actual amount of 1,200, and therefore, you can see that when an account is posted to the wrong side of the account, in order to correct it, you need to double the amount. As you can see here, what are we doing? We're saying minus 1,200, minus 1,200. You could have shown this as a minus to 2,400, right? Obviously, it's the same thing. But the reason I separated it here for you was to show you that the first 1,200 just cancels out the error, and then the actual return of the goods was the 1,200. So 15,900 minus your 1,200 minus 1,200 will give you a net figure of 13,500. Okay, right. So that error is now sorted out. We go on to the next one. No entry was made for a credit sales invoice issued to M. Veldhagen for 1,500. Initially, we corrected this in the control account. We added the 1,500 to our control account, but remember, we are busy fixing up the list. We're doing the debtors ledger now, and yes, this will impact on the debtors ledger as well. And we start off with M. Veldhagen, but note, very important, very, very, very important. Like we said, RTFQ, read the full question. Let's look at Veldhagen. What do we notice? That the opening balance is a credit of 1,900. The question arises, is it possible for a debtor to have a credit balance? And the answer is yes, certainly it can happen. Because, let me give you an explanation on that one there. A debtor buys for 10,000 Rand, pays the 10,000 Rand. Account is sorted, no balance, zero. Now the debtor returns goods to the value of 1,900. Clearly now you can see the account of the debtor goes into a credit balance. Here's an example. M. Veldhagen has a credit balance of 1,900, so be extremely careful. Don't take for granted that all your debtors will have debit balances. As you can clearly see, Veldhagen has a credit balance of 1,900. Therefore, if we're looking at Veldhagen's account now, here we go. Start off with a credit balance of 1,900. Can you see that minus sign is important? 1,900. And what are we doing? Because the sales invoice was omitted, it was left out, we're debiting debtor's control, therefore debit the debtor, add 1,500 to Veldhagen's account, and what you find now, a minus 1,900 and a plus 1,500 will still give you a negative figure of 400. Minus 19 plus 15, obviously you can see a negative 1,900 and a positive 1,500 will give you a negative 400 Rand. What do we now do? We've now done all the omissions and errors in both the control account and the list, and we now have to add our debtors list, and here we go. Add your 3,900 plus 11,450 plus minus the 400 plus 13,500 will give you a final balance of 28,450. Recall? Let's go back. What did we say? We said that this debtors control account had a reconciled balance of how much? 28,000. The same amount, let's just get it here. 28,450, and now you can see your list has a final balance of 28,000. Let's just get to that slide. There we go. 28,450. What have we done? We have reconciled. We've brought together. The word reconcile means to bring together. we've brought together what? The debtors control account balance as it appears in our general ledger, which was 28,450, and we have managed now with the errors and omissions to ensure that our debtors list as it appears in my debtors ledger. How much? 28,450. Voila. We have reconciled the debtors control account with our debtors list. Okay. Once again, it is important that when we're dealing with debtors, remember debtors are people that owe us money, right? There must be proper division of duties. Meaning, the person who is recording the credit sale, the person who receives the payment from the debtors should be two different people. Obviously, in that way, if you have division of duties, there's less possibility of fraud. Obviously, you do get collusion, but we're expecting our people to be honest, and therefore, by having different people doing different tasks, you are separating your duties, you are dividing your duties, so one can serve as a check on the other. There must be proper authorizing. It means not just anybody can buy goods from you. You got to check your debtors when you are selling goods to them. What's their outstanding balance? How much are they owing? Sometimes you have to set limits for your debtors to ensure that they do not exceed their credit limits, right? And also, we have to check that there is always proper documentation with regards to all our transactions. In other words, when you did your checks and balances, the profile of your debtor, was it completed? Tick the box, move on. Have all the documents been submitted? Tick the box. In that way, the profile is completed. Now your debtor is authorized to buy goods from you. Is there a limit for your debtor? Yes, there is. Is the debtor complying with the limit? Tick the box. In that way, we make sure that there's proper recording and follow-up of purchases, returns, discounts, interests, etc. Very often, learners feel that because of the way the curriculum is set out, that you find that it just says, write off the debtor as a bad debt. No, guys, it's not that simple. What we have to do, one, we provide incentives to our debtors to settle their accounts timeously. That means offer them discounts. If they don't settle their accounts timeously, that means you're giving them a credit period. They have to pay their accounts within 30 days. If that doesn't happen, then obviously you then charge interest on that overdue account. That means you now penalize them, right? If that does not work, remember we said, hand over the debtor to a debt collector, to a lawyer. Legal procedures are put into place to ensure that we recoup the debt. After all of that has failed, remember it's a process. Then, when the cost of recouping the debt becomes more expensive for us, because obviously the business has to pay for lawyers' fees, etc. Then, if all of that fails, then we have to, now what we have to do is then write off the debt of the debtor as irrecoverable. What do? We separate our duties in terms of all these processes, and in such a way, you can now see that we do a reconciliation at the end of each month. We make sure that all the processes are in place. Well, guys, from me, Ashraf Patel, and the crew, we are now disembarking from our journey. We've completed the debtors reconciliation. We wish that you we hope that you understand the different types of reconciliations, and we are sure you're going to ace this in the exams. From me and the crew, until the next time, be good. Bye-bye.